All right, let's bring in someone else in the mix. Jefferies chief market strategist David Zervos with his outlook. It's not surprising that Fed Governor Waller, who voted to cut last meeting, wants to cut this meeting. I would imagine you agree, or you think we should see cuts?
Sure, absolutely. Been pretty clear about that, and our notes to clients, as well as discussions with you and others on the network. I think there's a very cogent case for much lower interest rates.
Much lower? What do you mean much?
Well, Sarah, I've been arguing even back in the summer months of last year that the neutral rate is probably closer to 2 rather than 3%, and that as the balance sheet comes down, we lose that stimulus from the balance sheet, and we need to get rates back toward a more neutral place. That we've had a kind of temporarily high neutral rate because the balance sheet was so big for so long, and now that's just not the case anymore.
Where do you see it hurting the economy?
Clearly, the interest rate sensitive sectors. We all know the story. Housing, I think you just talked about that with Joe Livornia. This is not a symmetric distribution of Fed policy when you have the rate structure so high and the balance sheet that was high now coming down. So for me, it's an unfortunate situation that politics have gotten in the way of getting rates back to a more neutral place. I think a lot of miscalculations were made, but also some people with desires to act a little bit politically.
You really think Fed Chair Powell is not cutting rates because of politics?
I think there was a lot of pushback in April. I do. I think the tariffs really, the whole let's not enable these policies idea played a role in how Fed policy evolved post-tariff. So it's unfortunate, but we'll get through it. It's not the end of the world. The policies on fiscal, trade, immigration, regulatory policy, they're going to dominate. But it's just unfortunate that we have to have a little bit of a headwind from monetary policy that's, in my opinion, unnecessary.
Although, is there ever a situation where people jawbone the Fed to raise, to hike, right? I mean, political noise always wants cheaper rates.
I think, yes, and it comes from, we've seen letters from Maxine Waters, Sherrod Brown, Elizabeth Warren, all throughout the pre-election period. Please cut, please cut. And certainly we're finding out that there was a lot of pressure, maybe even behind the scenes with Janet Yellen, Lael Brainerd, Lisa Cook. All of that is political in nature. And then there's political on the other side. This is always going to be a political volleyball. And I think the Fed has to navigate that and has navigated that in some ways in a sort of eloquent way, in some ways in a clumsy way. And I think this is a bit clumsy.
I genuinely think that Powell and maybe others are worried about inflation as a result of tariffs. I mean, someone pays for tariffs, right? And it is usually the consumer. I have been saying every single day, it's great that we're not seeing big spikes in consumer price index. However, the risk is there with tariffs out there, no?
It's always a risk. I mean, what are you doing when you're running monetary policy? You're risk managing a situation. You're trading off these inflation and employment goals. You're taking some risk with inflation to get more jobs or vice versa. So I think the leaning on the risk side has political biases. That's all. But it's natural. I mean, look, when someone goes in and gets a job at the Supreme Court and becomes a justice, do you say, oh, they're immediately independent? They're somehow not going to hold true to their political and their principles that they believe in? I mean, there's clearly, a lot of different beliefs on that Supreme Court today, and they don't just leave them at the door when they go in to hear cases. So I don't think we would expect that at the Fed. That's why it's always so surprising to me when we hear these, constant discussions of elevated independence at the Fed when we know people bring their biases to the table. And they should. They should bring their views, their economic views, their political views. They should bring everything to do the job the best they can, which is to maximize employment and keep prices stable over the long run and not bring in a lot of these other goals that have creeped in, like inclusion and other stuff that
it does sound, though, like you see value in disparate points of view. Is there danger in sort of packing the committee?
Well, I don't really worry about that at this stage because the committee's kind of been pushed probably more toward the left side over recent years, so balancing it out seems like a healthy story. But yeah, I would say in government, it's always better to have a balanced view. I love the idea of having a debate with people with opposing views. I do that every day at Jefferies. That's my job. As I go in, sit with clients, I'm going to do that all afternoon with some very big clients and debate the macro view. And we have differences of opinion. I think, again, not to bring up your interview with Joe Livorni again, which I thought was great, he said it again when you asked him about what he'd like to see at the Fed, which is more open discussion. And I think we've lost a little bit of that. There's a lot of groupthink. It's nice to see Mickey Bowman and Chris Waller dissenting. Yeah. It's nice to see that there's others that are likely to come on that have a different view than that Keynesian. I think Joe actually used the DSGE words, dynamic, stochastic, general equilibrium, whatever, blah, blah, blah. You know, it's nice to see different neoclassical views or supply side views, as I like to call them, come into play. That'll be fun.